Hey guys, welcome to Operation Crypto. Today we're going to do some price analysis on Aave. We'll have a look at the asset in both the USDT and the BTC pairings and identify a few key levels as usual, some levels below if the price just continues to drop, or some levels above where we can look to either accumulate or just take our chips off the table. If you're new to this channel, please make sure that you are subscribed, hit that like button and let's crack on. Right, so let's get cracking. We will start off on the USDT pairing and have a look at what's going on really. So we're going to mark up the all-time highs first, which was up here at $669 before we did get that drop to the downside. And then the downside was here, down at 157. It is a nice area of support. That if you look at this area here, it was a support before the next leg up. Not far off it there, and then it is a leg here. So it is a key level at $157, which you could say is a decent buying opportunity. We've had a good rise actually from the 18th of December. It pushed up, we hit that 297, just short of 300 book level, and then we did retrace. While Bitcoin's coming down, it has been pulling the market down with it. So looking at its latest moves in terms of Fibonacci levels from the bottom to the top, we are doing a golden ratio retracement. We are getting no closures below that level, which is a good sign really. Whenever I'm looking at an asset that's done and moved to the upside, I'm looking for entries. I look at a few key levels. I look at this 382 level, but the golden ratio is usually the great region to invest. It ties in nicely actually. If you look at that golden ratio here, it comes all the way through, it taps it there and it taps it there. So it's a key fundamental level where price action is bouncing, because you can see support, and now it is back on that level of support at $210. If Bitcoin though does continue to drop, I know we're kind of consolidating at that next level of support down at 41k. If it does drop from there, then price action across the market does start to dwindle. Bearish scenario, you can look at buys here at $159. I think $159, $157 is a key region that you could look to buy. Really can't see it going lower than that. If we do go full-blown bear though and the markets die off, then you're probably going to look sub $100, maybe even down to this region here, where it's a nice level of support around here. So just be wary of that. Don't put all your chips in. Just keep some spare just in case we do get a pullback and we do go full-blown bear, because if we do, then these are opportunities to take that you probably didn't foresee coming. So that's a bearish scenario. Just looking at moving averages, 50 and the 20 I use, and we've had a bearish cross there, I believe it is, only a slight one, and we had a bearish cross here. Actually, it was coming up. We haven't, have we? We had a bearish cross here. It was coming up. We nearly did that bullish cross, but it just dropped below it, so we're not actually quite at that bullish cross yet. So we do need to see some more candles to the upside, potential above 240, 250. We may get that cross, but moving averages still in that downtrend and looking bearish. Moving average 200, we are below the 200. That is the daily moving average 200. For any bullish price action, really you want to see it back above there. So you're talking candles closing above $300 is where we really need to look. RSI is below mid-ground, so it's around 42. Last time we did drop down towards this oversold territory. We did get a push to the upside, and from that we managed to gain a close to that, look at a 88% push to the upside. Every time you do get towards oversold, it is usually a great time to buy. But yeah, we've pushed to the upside, and then we've got a nice rejection. We actually had a rejection to a T on that moving average 200, so you can see there we dropped down and use that golden ratio. I mean, these indicators are just falling to an absolute beauty level. So oversold RSI, push up, rejection off 200 moving daily average, drop down, then support at the golden ratio 618. So T8 is working absolutely perfectly on Aave here. So that's the buy zones there. I would ladder some in from 210 down to 157, maybe 3 orders within that area, and then just keep a bit of powder dry in case we do drop down to sub $100 if the market does push on. So if the market does drop into bear. If we're looking for some take profit regions, really, I think I wouldn't be taking any profit below that moving average 200. We need to get back above that, and then I'll probably look at this area of resistance here at 333. We've then got 381, and then above there's not much trading data, to be honest. I mean, we've got, let's have a look at that in terms of a date range. So from here to here, we only had 123 days worth of trading above that region. You could even say above there, to be honest, above that wick. We had 123 days worth of trading, so not much, and that's not much data, and not many resistance levels above here, really. I think this is the first major area at 420. Once you break above 420, if you look here, we'll put a box on it, and we'll catch this box all the way through. That is a massive level of resistance at around 420 to 430. Break above that and all-time highs will come fairly quick. So that's your buy zones covered. The sell zones, obviously, just above that moving average 200. Then we've got 333, 381, and then a massive level of resistance here at $440. I'm not going to look at any other time frames. I'm not going to look at any other indicators, because that's all that's going on. In terms of investment levels, I'm only going to look at that daily time frame, because we're still waiting for price action to follow on Aave and the rest of the market too. We'll just have a look at a BTC pairing. I don't think too many people cover Satoshi pairs, but if you're looking to accumulate via using Bitcoin, why not look at these charts? And let's have a zoom out, see what's going on. So all-time highs is up at 0.015 Satoshis, so that's, well, 0.015 BTC, so that's quite a significant price. We've had a bounce exactly the same as the dollar pairing in terms of a retracement. We're currently using the 382 level as support. Whenever Bitcoin is dropping, altcoins tend to perform well. That's why you've not seen a significant drop. Like on the dollar pair, we did a 618 retracement, but because Bitcoin were dropping, that means altcoins and Satoshi pairs tend to hold up quite well. A bit of a trick here, if you're ever looking at your portfolio and you see it crashing in US dollar pairs, switch it to Bitcoin pairs, and you won't see such a significant drop, and that's how you can take advantage of your portfolio. Use a Bitcoin dominance, so monitor the price in Bitcoin and also monitor it in dollars. And whenever Bitcoin is dropping, it's usually a good time to be in altcoins, but using Satoshi pairs, so buy and sell with Satoshis. If you're looking for buy zones, I'd still consider 4,000 Satoshis, all the way down to 1,700 for sats. I think if Bitcoin did rally, altcoins would take an absolute beating in the Satoshi pairs if it does go on a run, and if it starts to pull back volume. It's a key area around here, as you can see. We've bounced off it there, bounced off it there. So 1,700 sats, it might look very unlikely at a minute, but it is an area I would personally consider. Then obviously, if we're looking at sell zones, I mean, you've got this area up here, up at around 8,000 sats, but I'm more in favour in the Satoshi pairs to get orders filled from 4,000 down to 1,700. So that's price analysis on Aave today. What I'm going to do in the next couple of weeks, I'm also going to do a fundamental breakdown on Aave too, so keep your eyes peeled for that. Make sure that you are subscribed, hit that like button, and I'll catch you next time.